Morning traders, welcome to the TraderLab. I'm your host, Tom B. Thanks for stopping by today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into real time, we'll discuss it. Also, this is based on structured trades that are available to everyone and the Bookmap Discord TraderLab community. There's no cost for that. If you're visiting in YouTube, there's a link down there at the bottom. And if you would like to visit the TraderLab community, it is a community of like-minded traders who come together to leverage their collective experience. There's no cost for it, but you do need to verify your Discord email so we can eliminate and reduce any spam in the community. Also, so you understand, the TraderLab is about the business of trading. Trading is a business, and of course, many retail traders treat it like a video game. However, it is a serious business, and the TraderLab is a serious community. So you're all invited, but you know, it's not for everybody. But this is about the business of trading, how you might determine a way to create sustainability, subject to the work you do if you actually do the work, and it is going to require work. Understand, as you most probably do, that typical retail trader behavior does not have an edge, and there is no sustainability for the vast majority of retail traders. That in and of itself might want to give you a hint that maybe even though we all have random winners, if we don't have an edge, we still lose. Remember, in the casinos, the gamblers win, but over time, the casinos extract the dollars from the gamblers in a random distribution of outcomes. So the idea of this business is to only interact when you have an edge that favors you, and to also accept and detach yourself from the outcome of any specific individual interaction. It is about sustainability and detachment emotionally, so you have the ability to execute that plan. And also, it's about sampling. It's the number of samples it takes to extract dollars from the other side. And in that random distribution of outcomes, maintaining detachment so you can take the next trade and not be emotionally attached. And do you think it's easy? No, it isn't. But it is done by those who transition from emotionally triggered developing traders to those who have sustainability. And if you're interested in that, that's what the TraderLab is about. And you're all invited. I hope to see you there. So let's get into today, and let's go beyond that. By the way, there's a library of webinars available in the TraderLab and 60 PDFs of examples of structured trades. Now, this is not plug and play. You've all tried plug and play, and I'm going to suggest, how's that working for you? Never mind the winning trades. You don't need anything to have a winning trade, but you do need something different to have sustainability. You can start with these 60 PDFs, but these are not going to solve it for you. What might solve it for you is understanding how all these pieces fit together. So there is none of this line crosses over this and that, and you do something else. If it was that easy, we'd all be doing it. And I'm going to say you can spend your life chasing those winning trades, trying to make it consistent so you can achieve profitability. I'm going to suggest maybe not. Again, your mileage may vary. Now this, and by the way, if you're visiting, thanks for coming by the TraderLab today. If you have questions in YouTube or the TraderLab, post them in the chat. I'll do my best. But if I can't get to your questions, use the link in the bottom of YouTube, visit the TraderLab, post it in there, and I'll do my best during the trading session to get back to you on that. This is called a microcomposite, and all a microcomposite is swing, intermediate time frame. So we have our, and so you guys understand, this is the gap from the tariff pause day, and this is the poor auction we had, which suggested maybe the bond market's getting a bit out of control, and weakness in the dollar and repricing of risk for bondholders of U.S. debt. That's a big issue. The other thing is the Apple and EU tariff roulette, as I call it. On again, off again, and the market's going, what are you doing to me? So that's why you see this kind of behavior. So this was on again, and then over the weekend, and this is Friday, off again. So the market tends to go back to what disrupted it. If the news comes out, the market reprices. If the news changes over the weekend, the market reprices and can come back to where it was disrupted. Now, yesterday we had what's called a trend day up, and this is response to news. What else do we know here? The market is short. Buy stops, buy stops, buy stops, buy stops, buy stops, right? The other part of this is, on this day when we broke down, and this is news-based, do the Acapulco cliff dive, this yellow line, 59.48, was the highest volume. Now, in the auction, high volume is where the buyers, most of the volume took place, and think of it like a retail price, a fair price. However, when the news input comes in, what was fair becomes too high. In other words, all of a sudden we run away from it. I'm not paying that. Language of the market. So if we're moving down too high, so let's look. Too high, and too high, but news changes. Then too low. Retail yesterday, too high, and go from there. Now, here's another piece. In this intermediate time frame, remember, swing low, swing high. The high volume in here comes in at 59.08. Now, the concept behind this is something called, well, you guys think of it as integrating time frames, and it is. So we're trading something like Russian dolls. Think of a vertical integration of time frame. And I know you guys think like that, daily, weekly, monthly, whatever, 60-minute, 15-minute, 30-minute, 2-minute, 1-minute, tick charts, range charts, pick it. However, here's the however. However, when we get into developing time frame, the clock is removed for me, and what becomes important is something called fractals, because the clock doesn't regulate the interaction of the buyers and the sellers. So, for example, you have sellers there, you got buyers there. How long does it take for this microstructure to change? Well, now, if the sellers are there and the sellers are here and the buyers were there and the market's going down, what does that tell you? Going lower until my buyers are here. My sellers are here. That's delta. And why does the market go up? Because, number one, sellers are here. Sellers are here. Absorption is here. When the buyers get above the sellers, this is like order flow 101, and the sellers were here, which is why the market went down, and I get above it, where the sellers were, in a microstructure. And I'm just showing you a little something here. That says get long, or it says get out. Is that making some sense? How we doing in YouTube? Is this making some sense? How about Discord? Are you guys tracking? Okay, let's get to the RTH Open. Now, let's look at some levels that are important. Oh, I got to turn these off for a moment because they're current. We have yesterday's high. We have the ETH volume point of control. We have the ETH mid. There's statistics involved with this. They're all available in TraderLab. We have yesterday's naked volume point of control. The volume point of control is just high volume or retail price. The ETH volume point of control is the retail price from the most current auction or recent auction, which was the ETH. And the RTH open is here, yesterday's high, ETH high, and a target up above, naked volume point of control, 48, and stops over a previous high and another naked volume point of control. So this is the long side targeting. And if we fall out the bottom, we have this, 5908, the higher time frame potential target, and anything in between and everything in between. Does that make sense, guys? And I got to make a little adjustment here on my Investor RT, which is exporting cloud notes, all those levels you see, HVN and all that kind of stuff. I'm going to turn that off, and it takes a little time to update because I'm exporting them off of other software and has to kind of sync in the cloud and update. So that'll take. So these are going to come off, and so are these LVN. So don't worry about it. So let's go into the RTH open. By the way, stop an iceberg detector. I have to make some adjustments to it. It updated, and it's not quite, as they say, tweaked, only for size. You know, so I have to make some adjustments. So it's going to be a little different than what you typically see. So RTH open, 8:30 Central Time, my time. Now, what do we anticipate? Two things. We had a trend day yesterday, so potentially two things. Responsive selling, in other words, profit taking. Market opens, profit taking, that's one part. Then continuation longs, that's the next part. And then punt. And then if we get our continuation buying, then manage the longs. Then if we don't continue, and we don't know that, then if the condition of the market changes, then the longs that are in here from the, so think of it this way. The market's log from yesterday. If you open near yesterday's high and wherever, you might take some profits. And then those who were not long might come in and buy if there's a counter rotation. In other words, the market opens, it goes down, whatever it does, then goes up. And if the market goes up and there's late buyers, and then we run out of buyers, then what's in the market? The stops under today's buyers, early buyers, and then the stops down the pole from yesterday's trend up. So then it becomes long liquidation. We also have NVIDIA earnings today. That's a big deal. NVIDIA is a big part of the S&P 500 of the index. So that's a major event. We have FOMC minutes coming out, not the, but the minutes. Yeah, how do we feel about the economy? Yeah, we'll catch you later. So we have that going on. Those might impact the behavior of the participants. Now, the other thing is, and the joy of trading is it's all random as far as how it manifests itself. It's random. So let's get into this. 8:30 RTH open. So this is and right on the open, and like everything, you have to follow a plan, right? So in the TraderLab, this is about trade plans. You know what you will do when it shows up. You don't know what the market will do. It's no different than the casinos. They know how they play their games to extract their edge. They don't know the cards coming out of the deck or how gamblers play the cards. So it's 100% random 100% of the time, except how they play the game. Does that make sense? If the thing about trading, most of us come into the business looking to be right. What does that have to do with anything? Is it possible that you can't be right as far as the outcome of the trade? You can only be right in your application of your plan and your vetted edge. Anything else in between is gambling. Gamblers do not sustain in this business. They have a great time. I always suggest if you're inclined for the fix of gambling, the adrenaline and the dopamine and that excitement. By the way, when somebody sits at a slot machine in the casinos, why do they keep putting money in the machine? Occasionally they have winners. And every time they hit that, push the button or pull the arm as it used to be, right? One arm bandit, isn't that what they used to call it? You get a dopamine, like, oh, that little, it's a rush, a chemical rush in your brain. And the dopamine, the brain is conditioned to seek a dopamine. So you get this little boost to do it, and you keep doing it. And in the casinos, that's why you'll see people sit at these machines for 12 hours just throwing money in there with occasional winners and sometimes a big winner. But overall, the edge goes to the house. Are you gambling? And what stimulates you to gamble? If it's not profitable, other than the winners that come along the way that you could get no matter what you do, why are you doing it? You got to ask yourself the question. Some of it is psychological. In fact, most of it's psychological, chemical, and primal wiring. These are elements that will take you out of this business. So let's get into the open. But I want to always remind you why the TraderLab exists. It's because what I did. I'm the same as you. I've just been doing this going on 46 years. And I had to learn about this stuff on my own because there was no information. When I started in 1980, there were no off-floor traders. I was an anomaly. It didn't exist. It was off-floor traders. This is called the variable high volume node. I made these up when I was first working with Market Profile, which I learned from the guy who created it, Peter Stottlemyre, in 1985 or 6, somewhere in there. I started working with and I already had elements of how the market worked, but I didn't have a full understanding of it. So as I developed a better understanding, I tried to make sense out of it, of course. And needless to say, I had winning trades, but I was also having the same issues. Impulsing, not knowing what an edge was, seeing winning trades and just trying to get more winning trades. Now that seems like the same thing, doesn't it, as edge? But we all have winning trades, but if you don't have an ability to measure it, then it's just like gamblers, win, but they don't have an edge, right? And unless they're exceptional, where they know what their edge is, then they're gonna lose. And the secret sauce, I'm gonna say, are anchored inputs. The casino and the model is the casino, because the casino plays the games exactly the same way. That's an anchored input. Anchored inputs, deal a certain number of cards, turn this card over, do this, do that, whatever it is. And but they do it exactly the same way. They can measure that. If they change the game during the game, let's say blackjack, sometimes it's 5 cards. Let's throw 10 in there, whatever. How do you measure that and still call it blackjack? You can't, because now it has random inputs. Most retail traders don't have anchored inputs. They have random inputs. And as the old saying goes in computer days from early on with PCs, garbage in, garbage out. It's a garbage. Not to be critical. I'm just saying there's no edge. If you can't measure it because of random inputs, you're gambling. So like I say, if you want to gamble, go to a casino, get the ticket to the buffet. So here's what happens here. Market goes up. So we have continuation buying. So on the open, I see a sweep. Sell sweep suggests rotation. Liquidity comes into the order book. Selling icebergs. Buy stops. This is Louis right here. Louis with the Two lot go. By the way, what does this say? Language. The market speaks. Now, most of us let our indicators do the interpretation, right? I get it. Me too. So I never learned to speak market. Also, I didn't have the tools. Back in the Stone Age, we didn't have tools. Technical analysis, as you know it today, was in its infancy. Wells and Wilder, that kind of stuff. And there was no volume, no domes, none of this. If you wanted to place an order, you picked up the phone, called your guy on the floor. I mean, that's how it was. It was analog. You write your order on a ticket, time stamp it. Think about that. So anyway, that's where I started. So I was, as they say, in the middle of nowhere with no information. You want information, you buy a book. And I can tell you the books never did anything. Gave me ideas, gave me information, but it didn't solve the problem because I didn't know what the problem was. I just thought it was more indicators, more certainty, more confirmation. I didn't understand structured trades. Didn't exist. So liquidity comes in the book, selling icebergs. This is called VPOC migration. Think about what this says. The volume starts out here, and then the market moves away from it. What does that say? With the sweep, too low. All right, now what do you do? Well, what do we have? Yesterday's high. We have the ETH high, over 90% probability. Past performance not indicative of future results. Not a trade recommendation. Who knows? This was a previous high volume area, retail, that we fell away from. And this is another target up here, previous high. So this is where I'm looking to go. How do I get long? This is the problem. Because how do you do this? Well, great question. Here's what I'm looking for. This is too low. The other thing I know is these buyers, if we counter rotate, their stops are going to be under the opening swing low. Isn't that logical? And I think it's pretty much right there. I'm taking a wild guess here, opening swing low, since I can't quite see it. So the way I like to think is when the market rotates, the market goes up to go down. The market goes down to go up. Let's come back to this. How does the market work? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go, and by the way, it could go down to go up because this is a gap still. And then the news changes. The market goes up to go down. The market goes down to go up, or, whatever. So the market goes up to go down. The market goes down to go up. But here's the issue. Right here, absorption. Remember, red bubbles are here. These are sellers. They're being absorbed by the buyers. When you see delta and the market's not going down, there's a buyer. So these are market orders or sell stops. They are whatever they are because they're market orders. Buyers are above the sellers. Buyers are here. So sellers are here, absorbed. See the liquidity? Buyers are here, absorbed. Buyers are here. Liquidity is here. Buyers are here. Going to the moon, Alice. Sellers are here. Absorbed. Buyers are there. Sellers are here. Now, I don't know if it's going to, right? I get above them. Absorbed. Liquidity comes back in the book. No clue. Sellers are here. Sellers are there. Buyers are here. New volume point of control. VPOC migration. Retail price. Going to the moon, Alice. Look at the book. Look at this. And what happens here? Sellers now are under the buyers. Under the buyers. Buyers are here. Liquidity is there. Icebergs under the buyers, under the developing volume point of control. This is what I call a warning Will Robinson moment. This was too low. This is our support. Stops are under the opening swing low. Now, I'm going to go into something a little interesting here. I'm going to talk about responsive selling. These guys are responding. And remember where the stops are. Under here, the market goes up to go down. The market goes down to go somewhere and maybe up. Okay? Trend is up, as far as we know. So, watch. Too high? VPOC migration. What do you see happening with the retail price? Think shopping. It's going down. What does that tell me? Wait. So, we start out too low, too high. New retail price. Shifts lower. New retail price. Now, I'm going to show you a long, and this takes a little study. Here. So, here's how this works. If we have buyers, liquidity, break low, too high, break low, too high, break low, too low. This becomes a long. Going for the ETH high, going for this. VPOC migration, language of the market, no indicators. I took this one. So for me today, I was anticipating responsive selling. I'm sorry. Buyers, the late buyers, take them out. Thanks for playing. This is when you get the coupon to the buffet. Take them out. 60 sell stops come out. Okay. And then let's look at the microstructure. Now, right here is resistance. And what do you notice? Let's look at what we notice. Get below it, resistance. Get below it, resistance. Go into zero. Resistance. Get below it, going to, wait a minute. Come on, if you were short, me, not so much. Get above it. Once it transitions, it's a long. VPOC migration. What's the language say? Now it's too low. So I got long as soon as I saw this. And I haven't given this a name, but I will tell you that if you understand context, you have to define it. Is it responsive selling? Or the initiative, because depending on the condition of the market, it would be different. This could be a short under different conditions. But for me, it was a long. Okay? So I'm just saying. Because I'm aligning with what I perceive to be the trend, which is up. Not down at the moment. So, VPOC migration, too low. So, long, long, long. Over 90% probability, which is another reason why I'm doing a long in this, and maybe higher. Let me take you back so you see how this all fits. Here, that's the 48, and then the stops are over this, and then 60. So I was going for 48, this high, and 60. Let me bring you back so you see the levels. This is how the auction works. So 48, that high, where the stops are, and 60. Okay? So that's my plan on the long side for today. C'est la guerre, as they say. So, long, trade management, helmet, having a good time. I took a scale here. And this was my target. And then one for the, as they say, for the hit parade. Now, watch right here. VPOC migration. Watch a process. Now remember, process it's almost like on a track. Actually, that's what process is. You know what you're going to do. It's all laid out before you come in the market. There is nothing else for you to do. The business plan or the trade plan for the current condition of the market, you know what you will do. You know how you'll do it. You know where you will do it, and you have nothing else to do. If you're doing anything else, now you're sitting with the gamblers. And I always say, be sure to get the coupon to the buffet while you're at it, because that you might as well enjoy yourself. So let's look at what we have here. This is a buy sweep. This is the stop and iceberg detector, and the sweeps are part of this. And when I see a sweep, it suggests to me, and these are stops, and again, I have to adjust all this stuff, and these are the ice, and there's my liquidity, okay? You do notice something similar somewhere. I think it was there. Okay, there's the liquidity, there's the reaction. So now I'm coming up to my targets, liquidity sweep. This is, I call, a warning Will Robinson moment. So I'm on alert now, because I don't know where anything's, I don't know. So, and if you think you know, come to TraderLab, let us know, because I have no clue. I am clueless, and I have to be clueless because I can't predict. Now, clueless doesn't mean ignorant. What it means is, where are the sellers going to come in? And are the sellers going to be absorbed by the buyers, or are the sellers going to take control? This is, as they say, the $64,000 question. But let's look at the behavior. I break below. Now remember over here, I broke above and lifted off. What happens here? What I would like to see, if this now is too low and this becomes my new retail price, I'm looking for to do that, or to come out here, test this area, and come back here, and then up. So this is a context in a context. Now I looked at this, and I said to myself, I said, well, I have two conditions here. First of all, I'm going up. This is good. I have targets above. This is good. And I have this. What does this create for me? Well, the sweep suggests counter rotation. I know this is an area of potential support right there. This is an advanced TraderLab method. I break below it. My next area is this. It's called the low volume node. So what that is market is going up. So directional is up. And in the higher time frame, let's suggest at the time the trend is still up, and maybe the trend is up. If I pull outside my next trade, and now I'm changing conditions in the developing time frame, I'm now going into something called mean reversion. That's outside in. So the market goes from directional, which is what we got here, and then it goes into rotation. So in the TraderLab, you have plans inside plans. So at the moment, higher time frame, trend up, developing time frame, trend up. Here it changes to rotational. So in other words, and this is the retail price. So how does the market work? Market goes wherever it goes, and then if it finds a retail price that it likes, it's going to start auctioning. It's going to go, what's too high, what's too low, what's retail, and it can do this. So if it starts rotating, then the idea would be either you're holding along already, a runner, or subject to your plan, this would set up a long to come back here. Now, there's a little bit of a problem with this. Let me tell you what it is. I'm sitting here, just like you, and I'm long, and I'm, the teeth are starting to chatter, and I say to myself, well, this is a distribution, and what a distribution is an auction. So if I come back here, right now this is an auction, okay? Too high, too low, too high, too low, retail, high volume. If I leave it, it might say, and I was going to say maybe because that's the best you have, that's too low. So when I break away from it, I'm now looking for too high. So I'm looking for the auction. Liquidity. Now here's my sweeps. This is my alert, and this is my liquidity. And now I'm developing a high volume node here. Remember, too high, too low, too high, too low, retail. Okay? So going up, going to the moon, right? Sweep. This is saying counter rotation. Now let's look back here. What do I know about this? I know this is number one, poorly auctioned. And as far as I know, which of course I know I don't know, is I'm going for this. That's my next target, sticking with it. So this migrates up. Everything is saying, have a great time, except for the sweep. If I come under the developing volume point of control, which is this, now I'm switching context into outside in trading. Okay? Now, where did we leave this? The outside edge is down here. This is called the low volume node. I'm just going to throw this in here. You can kind of see the outside edge of the distribution. Let me mark it. Now, the way this thing, rotations tend to work, and if you think of it like an auction, in all fractals and time frames, the market is looking for what's too low. If this is the fair price, and this is where the highest volume is, and think, like you do in your store, the fair price. Yeah, we're willing to buy S&Ps here. If it goes on sale, and we perceive this is the fair price, we can buy it. Because we may, if it's too low, and we don't know exactly where that is naturally, then we can come back and check retail. Is this too low? Throw 2 in the cart in the store, the S&P store. Come back here. And then potentially continue. Because we're in a directional movement, and this is the first real counter rotation from the up move. And now we're in what's called mean reversion, back to the mean. So this is a context in the context. This is the outside edge. Now, the objective of this is to come here and come out the top and continue on our merry way. Now, there's another piece to this. Sweep, liquidity, and I have to clear this. Now, this is not qualified only for one reason, the range, to take along. Here, let me show you. So in a trade plan, if I see this, I'm anticipating coming outside. Also, I know this was a naked volume point of control or retail price in a higher time frame. I'm not going to spend time with it. You can learn this in TraderLab. So this is kind of a support area for me, and this is my outside edge out here somewhere. So right here is support. Outside edge is out in here. This is resistance. Let's watch. And what else do I know? My sellers were here. My buyers were there. And I broke down. So this right here is my last support. Right there. Buyers were there, sellers are here, sellers are here, sellers are now below the buyers. Sweep, see you later, thanks for playing, send you a coupon. Down here, absorption, buying icebergs, sell stops, buyers get above these guys who are absorbed by the iceberg, and this is your resistance. This is called mean reversion. Now, I just want to stress to you guys, this is a structured trade in the TraderLab, except you have to vet it, and from your entry to the mean reversion, you need enough range to get scaled. If you put this trade on, no matter where you are, and you don't have a way in, and if you enter here, that's FOMO, because the trade for me, would not be qualified. I looked at this, and if I'd come further outside, I was going to add here. I didn't get to add here because I can't enter. I'd be entering probably up in here, and this is my obstacle. So nothing to do. And this, okay? Because why? My sellers took control here. Is this making sense? How about a like in YouTube? Thank you. By the way, if you're in YouTube, you have questions, post them. I'll do my best. So, resistance, sweep, liquidity, clueless, long to there, resistance, clueless, clueless, not ignorant. What does it say? I don't use indicators. Now, I do measure volume and order flow events, but I don't have the spaghetti on the chart like we all had or have. I don't. Maybe you do. What I found was instead of using a translator of price action that is lagging and is not sensitive to context, in other words, condition of the market, if I narrate the market, and I had to learn to speak a language. The language, this is a foreign language. And if you want to learn a foreign language, just think about it. If you ever took language or music or dancing, what does it take to learn it? Right? Well, this is what it takes to learn trading, in my opinion. To read this, you have to know the pieces and the language of the market. And even then, we all take stops. It has nothing to do with it. Stops are just overhead and cost of production. It's not about your ego. By the way, I know you want to feel smart. Well, when you take a loss, what do you feel? You notice how I'm using the term feel? What do you feel? Pain and disapproval. Or, gee, I'm not smart, self-depreciation. All that is nonsense in the trading business. Fine out in the world. If you want to self-flagellate, fine. Not here. When the dealer deals the cards and the gamblers get paid, I can assure you the dealer doesn't feel like he's a dummy. He has no attachment, or she, to the outcome. We are attached. That is a problem. If you want to be in this business, you need to desensitize yourself and learn what it means to have an edge and to accept random outcomes. When you don't have statistics, all you have is emotions and the benefit of hindsight, which is really terrific. Oh, I should have done this. I shouldn't have done that. It's always wonderful. It's so clear in hindsight. Well, we don't get the benefit of hindsight. So we have to act when our trade shows up, not otherwise, or else you're just playing a video game and you'll be out of the business. It's up to you whether you want to be in the business. I believe if you come to TraderLab, you can learn. Doesn't mean you'll be successful, because many traders are just hopping chat rooms looking for plug and play. I'm going to suggest maybe that's not the way this works. Just an opinion. So where are my buyers? They are there. There's my iceberg. My sellers absorb this buyer. Sellers are there. There's my break. I hit this, which is the retail price. I pull back. Let me show it to you. This is microstructure here. So how do I read this? Absorption, no clue. Buyers get above this guy. Where's the last place my buyers were absorbed? Here. So sellers are there. Buyers are here. The buyers get above the sellers. That is a trigger. Now, this would be my target, but this would have to be out here. But how do I do this? This is my entry. You see? Why? Sellers got taken out here. Buyers came in here. Buyers are under there. If this was further away, this is a structured entry. This is the target. Now you have to understand, there's no range here, so I could not take the trade. But if this whole structure was down somewhere else, like the VWAP, the VPOC is a structured trade also here, mean reversion. But so this trade, if it was anywhere else with structure, it's a long. But I want you to see how structure works in the auction. Remember, the auction doesn't care about the things we need for risk reward. Absolutely not. And what is this? Too high. So what do I know? Too high? Too low. Trigger? entry, obstacle. I'm sorry, entry was here, obstacle. So this trade is from there to there. Now, 1.5 points, not in my wheelhouse. It doesn't qualify. Why? My stop's got to be under here. So I can't take the trade. Is everybody following? I want to make sure you understand. That is a structured trade, not qualified. Can you see the difference? Are you guys following? How are we doing in YouTube? TraderLab is Johnny. Did you click the link in the bottom of YouTube and go to the TraderLab? You need to verify your Discord email. And then you just, after you verify, click the top and it'll show you all the chats and you'll see TraderLab in there. So Johnny, if you can't find it, don't worry about it. We'll get you. Okay. And how are we doing in YouTube? That is a structured trade. Do you understand also? I want you to see how the market works. You can learn how the market works. If you understand the language of the market, if I'm using an indicator and I couldn't tell you which one, pick one. When would I be getting long here? Would I be getting long there? Or would I be getting long up here? I mean, I don't know. I'm asking you. Now here's the other thing. If I understand what happened here, and I understand right here is where the buyers took over and the sellers got filleted, and I pull back to where the buyers took control, is it logical that I could get long to the mean? That's what this is called, mean reversion. And that's the mean or the mode. Now, if this becomes too high, don't forget, see the absorption here? The buyers are here. The buyers are here. This trade has not failed yet. But when we break below here, it's hasta la vista. Thanks for playing. We'll send you a coupon, Tom, to the buffet, except Tom didn't get long. I was waiting for it. I was looking for it, but it didn't do it. Now, when we're falling out, now this is an important thing to understand. This is called the distribution, right? Too high, too low, too high, too low, retail, high volume, which is here. So if I find too high, notice only 16 went off at the high of the day. And let me tell you what that is. That is saying we ran out of buyers. That's too high. Now, we won't know that naturally until hindsight. So now I know. Oh, nice to know. What else do I know? This now is too high. What else do I know? Outside edge, which is the reason for coming back here. If I fall out of this, we are then potentially rejecting this whole auction. This is like too low, too high. What do you think? Oh, it's on sale. How about up here? I'm not paying that. Retail. If we all leave the store, then trouble. And here's where the trouble is. Break low, VWAP, resistance now is here. And if we're going to regain this thing, we got to get through here. So I saw this and I'm, the teeth start chattering and I'm going, this looks a little weird. And I'm below this. So that put me off the whole idea of longs. Now, let me show you. So what do I know? Well, now I'm under here and this was too low. I break here. Now this is my support. I come down here, boom, boom, boom. I'm trying to remember where I got short. Let me see. I got to go back on my trading platform here. Gotta find it. So once it ran away from me, then I have nothing to do. I have this as support, and I break below it. So now I'm looking for a short, and I get into yesterday's range, okay? So this is too high. Let's watch what happens here. Where is that short? Oh, gosh. Just a second, guys. I got to find this. It's really bothering. I think it was here. Yep. Here. So we break down. I'm below the overnight volume point of control. I'm below the opening swing low. We've taken back everything. This is my short. Now, right here, I'm under the overnight VPOC. I'm under yesterday's high. I'm back in the range, and I have another low volume node here. Let me just put it in here. And I break here. So now I'm falling out of this. So now I've got to turn the barge around. And up until this point, I did not have a short for me. Now, I'm sure others, were in here sooner. Doesn't matter. So right here, now I'm falling out of the range. The longs have failed. The outside edge is here. I break. And right here is resistance. Breakdown. Buyers were here. Sellers are here. There's your iceberg. These are buy stops. I got my icebergs. I have my microstructure is right here. No, I didn't enter here. I'm too busy getting my brain screwed on right. So here, trigger, break away. Can't get in here. Where's my resistance? It's right here. This is where I got short. And then I'm going for, let me show you where I'm going. This. 26. And these are low volume areas from yesterday because we've ripped. The market tends to come back. And there's another target down there, this one. The micro composite volume point of control, about 5907. Again, let's go back to the higher time frame. So this target was yesterday's volume point of control, whatever that is. That was the target 20, let me see. 26, 27-ish, right there. Then 5908, the higher time frame target. This is where those levels are coming from. 5908 higher time frame. So let's see. And I had a long in here too. I got to talk about that one. Now we have a couple of, so anyway, this is a short. VPOC migration. I know you're paying attention. You know now what this means. It says everything above is too high. VPOC migration. Notice what the VPOC is. It is measuring volume. So when you have high volume, in all fractals and time frames, this is the highest volume for the full day as it's developing. When you go down in microstructure, it's the same behavior. Think of this like its own little day. Too high, too low. Where's the high volume? It's right here. I'm going to throw this in here for you. It's there. Sellers took over here. Sellers took over there. Short. Sellers took over here. Short. VPOC migration. Either this or that. So short. Where am I trying to go? Here. VPOC migration. I'm not paying that. Variable high volume node. This is process, guys. And it's random too. This is part of the thrill. Target. Now, for me, that was it for me. I was out of my short, and wherever that was from, can't remember anymore. I'm not going to look. Now, here's a sweep. This is very important right here, because now, there's liquidity. There's a sweep. That's a just counter rotation. So right here, you could be done with this trade, or we're looking for it to come lower because there's these singles down here. And a single's just a poorly auctioned area because we ripped, right? Oh, VPOC migration. Too high. Retail, watch. Now, as far as I know, going to zero, right? How do we know where it's going? We don't. So, in our business, it's not knowing. It is operating in not knowing. And then it's trade management, whatever you do. Now, I have another trade that shows up here, and it's called the IBF. Now, the IBF is a counter trend or counter rotation reversion trade. And the idea of this is, and this is the first hour's low, it's locked in at 9:30 Central Time. And the idea is that if we come out here and then come back in, we can return here. So this sets up, my next trade is a long. And you're going to go, why do you want to get long when everybody's getting short? Why? Same reason I was getting short. The market goes up to go down. The market goes down to go up. If this is the price, you remember at the top of the range, I was looking for something called mean reversion, which was outside in to the long side. Well, now I've come down and the market is short. Well, the possibility exists if I get down here somewhere, that's always the joy, somewhere, and I see a long, I can get long to come back here. And you might consider it counter trend, and that's just a matter of your plan. If you think the trend is down, then you don't do this. This set the long up. I believe it was here. And I was looking for this. So I got long. Let me look where it was. Now, the trades I am sharing with you here, I'm not saying these are any good. I'm not saying it should be your trade. There's no right way to trade. What time was that? Oh, actually, let's see. Where is it? Um, 9:38. Oh, here. So we came outside. I got long here for the IBF, and the goal is to come here. Okay? This was within my, my range. Now there's another element to this. Let's isolate this. Boy, I got to adjust this. I'm really sorry about all the noise on this. I didn't get a chance. We had an update this morning and to the stop an iceberg detector, making improvements in it. But I didn't get a chance to tweak it. So ran out, it's either tweak or trade. So I'm a full-time trader. I lean towards the trading idea. Here's your liquidity. Here's your buying icebergs. That's these guys. These are limit orders. And there's the liquidity. We can see them. Now, we got them here. Why didn't I get long there? Well, I didn't. Because I'm seeing the sellers are here. Let's look. The buyers are there. I break low. The language suggests the sellers are still in control. The sellers are there. The buyers were here. That's a buyer. Get below the buyer, seller in control. I got my buyers here. My sellers are there. Buyers are here. Sellers are here. This is absorption. No clue. Sellers are here. Buyers are here. Buyers are there. Sellers are here. Break below. Icebergs, sell stops, absorption, as far as I know, going to zero. What happens here? Let's look. Sellers are here. This is a way to see the output of order flow. It's just something for you to see structure. So sellers, buyers, no clue. Sellers going to zero. Break high. Right here, buyers are taking control, right there. So how might I do this? Now don't forget, I can read order flow. So for me, my long is like right in here. But most probably won't. You could be buying any of this if that's your plan. And then this is called the IBF. Now here's the problem. This is the high volume right here. Now this is a little bit more advanced. Let's just call this a high volume node. So that's like a little VPOC in a fractal. So this is an auction. Too high, too low, too high, too low, fall out, too high, too low, too high, too low. Retail is in here, the high volume, break below it, it becomes support. Where might I go? Here and there. So I took a long. Now, what I know is stops are going to be above here. And the idea, the IBF is called, or IB failure, I made the trade up, I didn't know, and is to get through here and come here. This is the trade, and that has range. I can handle that. So long, scale, and then I'm going for this. Is everybody tracking so far? That's called the IB failure. Yeah, Johnny, this is today's market. How we doing, guys? Please give a like if you're in YouTube. Yeah, Rambo. Yeah, it's a good IBF. But you got to be really skilled for this one because I took it out here, and depending on where individual development is, other traders would be taking it here when it comes across. I just, do my thing. And I've been doing this a little longer than most of you, going on 46 years. Not this process, but over maybe 35 years of trading this way, but without order flow. So I traded exactly this way without order flow. And it was very hard for me to take all my hand indicators, which I spent so many years working with, and ripping them out. A real hard time. You know the old saying, oh, I must have got something out of it. Too high. New retail price right here. Now, right here, I'm going to change this to a VHVN, okay? Variable high volume node. What is the market saying? Remember, this is language. Remember I said it's a foreign language or musical instrument. This is too high. New retail price. This is a problem. Now, right here, what do we know? You've seen this. It's called VPOC migration. I did a webinar on this. It's nuanced and it's somewhat advanced. The market could bounce off of here, come back here, and if it comes back here, hasta la vista, I get the coupon to the buffet, but I am risk neutral. Or we're going to come back to the variable high volume node. So what do I know? Right? Auction, too low. HVN is right there. Here, let me put a little. See, what I'm doing is the same thing and it's the same. Once you understand the behavior, you can take this behavior and extrapolate it into any micro fractal or time frame, if you want to use the term. But there's no time here. This has nothing to do with the clock. This has to do with what happens to the participants. When the sellers who are here, I know right here is my little sandbox. These guys were absorbed. The sellers are here. If the buyers get above the sellers, I want to get long. Where's the volume in here? It's in here. So if I pull back after a trigger, I can get long in here. My stop goes under here, and I either get thrown under the bus with everybody else, or I squeeze here, I come back here, and I'm looking for this. This is a high volume node. It's an issue, but I'm looking for us to come to the next higher fractal up or developing time frame. This drops down. This is a warning Will Robinson moment. And it's either going to do this or this. Right here, it has to hold this. And then this becomes the obstacle. Let's see what it does. Hasta la vista. Thanks for playing. And that was my last trade for me. This is another IBF here. Now this I did not participate in. I was distracted, so I wasn't able to do any more trades for me. Now this, depending how you slice and dice it, now let's look at behavior again, right? Come on. If this is too high, what happens? South of the border. If this is too low, back to check. If this becomes too high, retail. Too high? I'm not paying that. Too high? I'm not paying that. Lower, right? This was the IBF. Hasta la vista, Tom. I'm going to give you a coupon. Now, pull back to the IB. Now, there's two possibilities here. One is you can sell this. It's called the IB continuation trade. At this point, I was doing other things in the chat, and I wasn't able to concentrate, so I don't trade. Pull back here. Too high? I'm not paying that. Is it really too high? Yes. Potential short. Where to? South of the border. Or potential long. Where to? Where to go? Oh, I'm sorry, not there. Potential short here, or potential long back here. But the better trade is short. And again, once I'm not able to trade, I just don't trade anymore. Too high. What happens here? New retail price. I'm not paying that. New retail price. Watch. Now, I'm not saying you should be doing all this, but I'm saying you can learn to, or some of it. You don't need to be doing all this. How many trades do you need a day? I found, for me, that since I take stops, I know you guys don't, but I do, that I want to get on trades that give me range. So I get paid for the risk I take. I'm not get in here, risk 3 points to make 5 ticks. I don't do that. And they're done then. Too high. Didn't get there. So this right here, you see the sweep suggests the counter rotation. If it got up here, this might be a short for me because this is too high right there. Liquidity comes in the book. Now, if you're trading with order flow, I combine both, but I use the chassis as the profile to overlay trades on. So I'm combining order flow and location. That's just the way I do it. I'm not saying it's the best way to do it. And the other thing is, if you get advanced in order flow, you could short this right here. And why? Here's something for you, this astute group of traders. Why? Let me show you why. I'm getting into something advanced, and if it makes you nutty, forgive me in advance. Where were the sellers? Where were the buyers? Where did the sellers take over? Trigger. This is a short in the TraderLab, and then this shifts down. Hasta la vista. This is a buy sweep. What does that say? Well, subject to your plan, counter rotation. Now, right here, I don't know. I can get a sweep and it can go to 0. I do not know. Let me tell you what I do know. I know My sellers are here. My sellers are here. My sellers are here. And my sellers are under my buyers, which were there. My sellers are here. My buyers are here. My sellers are below my buyers. Sellers, sellers, sweep. Warning, Will Robinson. My buyers are here. My sellers are here. My sellers are here. My buyers are above my sellers. My buyers absorb this. There's my sweep. There's my iceberg, microstructure. Sellers were there, right there. Buyers get above, micro trigger. Where's my resistance? Here and here. Okay. Now, subject to your trade plan, you have to have a trade management process. Now, whatever you do, you do. That's individual. Now, if this is mean reversion, where's the mean? It's here. I get above it. What's next? Out here and maybe back to there. Let's just see what it does. I haven't seen this, so I don't know. Oh, where's my resistance, you ask? It's right here. Because my sellers took control over here. This is a sell trigger. This could be a short entry, subject to time frame. Your support is sitting here. This is where the buyers took over. Let's look at the symmetry and just see what happens. So sell here, buyers are here. The way I think about this at times is where if I took a short here, I'm going to be targeting this. Well, this, and this. Why would I target this? Because my buyers are here. So if my buyers are here, I want, because they may show up again. If they thought this was a heck of a deal, they may show up here. See them? The sellers thought this was too high. They might show up here. The buyers thought this, which was the last swing down, was too low, right here. Buyers are there. Let me put a little line in here just to help you see this. So if I get short, I'm looking to scale ahead of this. There. Or a little ahead, This is my retail price in the developing daily time frame. This is my retail price in the microstructure. This is my retail price in the microstructure. This is my retail price in the next higher time frame, developing daily time frame. Fractals, Russian dolls, Matryoshka dolls. Short, scale. If that's too high, lower. If not, rotation. That's all I know. I don't need to know anything else. I can't know anything else. Where are we? Oh, there you go. Now, boy, that bothers me. It bugs me. It's just an adjustment. I can't do it now. Back to the VHVN. Let's look. Sellers are here. I don't have anything here. I'm above my resistance. So if I don't have a trade, guys, I just hang out. I got nothing to do. We do want to look up here, outside edge, out here, and we want to look here for potential reversion this way. Not a recommendation. Let's see what it does. I'm going to remove this thing. I got to look back over here. Here's another thing. Write this down, guys. You need to look left. You need to look left. Where's the swings? Because the stops are above the swings. Here. And retail traders trail their stops. Think like a retail trader. Don't act like one. If I get the stops out and I see absorption and it's at a location, there's a lot of ands to qualify it in this area, it's potentially a short back to here. Not a trade recommendation. I'm always going to say potentially because who knows? I take stops. So let's see what it does. too high. Stops are above these swings. So here, this is my area to look, and the VWAP. So I have, and again, outside edge. So let me turn some levels on. How you guys doing? Johnny, don't spend too much time with the AI. Not ripe. It's the latest thing, you know? And the latest thing is the AI really doesn't do it. That's all I can tell you. And I will share with you, and this is just an opinion. I might be completely off base. I work with quants and hedge funds also, besides my own personal trading and doing a little streaming here for Bookmap. And I will suggest AI and machine learning has been around much longer than it's been available in the retail space. I will also suggest that in these hedge funds, there are guys in there that if they wanted, they could land a rocket on Mars. We're talking physicists, PhD mathematicians, really sharp, just somebody you can't even have a conversation with because they're just so far out. And I have worked, and I am currently working with, all I'm going to say to you is, I'm going to suggest, other than a hobby or curiosity, that you don't put your energy into AI, that you put your energy into learning to trade and learn how the market works. Because your mind, your brain, its processing power supersedes anything that's available right now, at least in the retail space. So anyway, just a little something. And of course, I'm not suggesting that you take my word for it or you change what you're doing. But I am going to suggest you think about it. I don't have an IBC. I'm getting a question about getting short. No. We are in two-sided trade. And I would think the opportunity might be up here or here. And then the trade would be to come back out here and then maybe fall out the bottom. I would not, because where's the stops? They're here. So why would I take a short in front of the stops? Now, if somebody took this, this is where you're going. Can you enter? How do you enter this when the VPOC is sitting here? If you're going to take a short, wouldn't you be doing it from here to here? The reversion trade? I mean, think about it. For a lot, Tony. It's not Tony. It's Ty. We had a 2-lot Tony in here. How are we doing in YouTube? Guys, if you're visiting in YouTube and you get something out of this, 2 requests. 1, please hit the like. It supports the stream. And it supports the TraderLab because there's no cost for the lab. You can come to the Bookmap Discord TraderLab community. There's a library of webinars on this process. Some of these are up to almost 5 hours long of real-time narration, the full day. And you can follow those. And then a lot of other things, a lot of other topics. How do you integrate timeframes? How do you integrate the higher time frame with the developing time frame, if you will? How do you trade in fractals? How do you read order flow and put the pieces together? How can you trade without indicators? Why might you consider that an option? And does it give you an edge? And why do traders, retail traders who use canned indicators and load them on to create certainty, why do they typically have no sustainability in the business? Do you know why? Also, Do you know how to potentially get control over your emotions? Do you know what triggers them? And do you know what the solution might be? Do you FOMO? Do you skip trades? Do you get impatient? Do you feel you have to be busy because you're sitting here? And are you not, other than isolated winning trades, which gamblers have also, are you not a profitable trader? That's what why I agreed to do TraderLab. And it's a reflection of what I've done. Because over 46 years of doing this, and eventually as a professional, and then, out here now with you, I had to walk in the same shoes you're currently walking in. So, it's up to you, of course. We all go, and there's a book I recommend. In fact, I posted a link over the weekend in the TraderLab called The Best Loser Wins by Tom Hogarth. It's a great read. But I have a short version of it posted in TraderLab. And if you come to the TraderLab community, you can just scroll back to Saturday. You'll see it sitting in there. I think it's about 25, 30 minutes maybe. And it's a kind of a synopsis. And see if it's not all about you. Because we, as a collective, being human, do the same thing. Remember, this was too high. So, if you don't have a trade here, and this is where you want to trade, then there's no trade, right? But what do I know? I know this is too high, you see. So what I do is I have my locations, outside edge, too high. So this is reversion trading. Now, if it doesn't come to the location, because this is where we're looking for this to go right here. This is what mean reversion is. Now, if we think the current trend in the developing time frame is down, the only thing I have is shorts, And if it doesn't come to a location, now this is a location, but this is a better location. Why would this be a better location? Because we have a structured trade in the TraderLab called VWAP to VPOC. We also can trade VHVN to VPOC, a little more advanced. But, it can be a structured trade if you vet it. I trade this, I trade that. I take stops. I want to step on a rake sometimes because the outcome is random. But if I follow my plan, I give myself a gold star. If I break my rules, I have an error cost calculator. I put it in there because that'll take me out of the business. Fortunately, I worked with the error cost calculator, I think in 2000 or somewhere. And it showed me I was throwing anywhere from $5,000 to $20,000 a month out the window. I figured out that wasn't a good plan. But because I quantified it, I made it tangible, as opposed to, I made a mistake, and then go on to the next trade and never think about it again. Why? Ego and our psychology. Pain, we want to avoid. Errors, we make them. We want to avoid reflecting on them. We quantify them, we make them tangible. We make them tangible, we can now get our, quote, arms around it and make a decision. And by quantifying behavior, we then know the impact. When I follow my plan, do I get a yield? When I break my rules or my plan, how does that impact my bottom line? Not so good. Well, if I know what it is, does that create motivation? Or am I myopic and only looking for the next trade and ignoring what just happened that was under my control? What's under my control is not the outcome. What's under my control is what I do. Does that make sense? Yeah, Johnny, I understand it can analyze data. That's not the point. Like I said, Johnny, you have to do what works for you. There's no right or wrong in trading. But I will suggest that others who have much deeper pockets and have been doing this for many years with machine learning, neural networks, have already been there and done that. But I'm only sharing my experience. I'm not saying it's a good one or it's right for you. But, derive an edge from that, Johnny, and come to TraderLab and share it with us. We already do data mining in the TraderLab, and so there's a lot of that going on. But you don't need AI in order to do that. And of course, you can throw information into it and it'll spit something out that might be useful, but on a very remedial level when it comes to trading. So far, not saying it won't change in the future. Oh, that's cute. Bad Orca, that's really nice. Bad Orca just posted in the TraderLab the Matryoshka model of market context, vertical integration of timeframes. You know how timeframes are vertically integrated. Well, a Matryoshka doll is vertically integrated. The little dolls are the same as the big doll. So when I'm going into microstructure, I'm doing the same thing in all fractals or timeframes as you think of them. So if you can think of vertical integration, then you can understand trading in fractals because they're all the same. And where's the target down here? And this is not a recommendation. This is where ultimately we're trying to get to. And that can happen. We have a report coming out, FOMC meeting minutes, which might create a hiccup. Always be aware, use a calendar, know what's coming out. And my suggestion is don't trade where you don't have good control. External inputs disrupt the auction. If you're caught on the wrong side of a trade, your stop is a suggestion. They'll call you next week with a fill, and you'll be skidded. Risk control goes out the window. Unless you're short from way up top, you're taking potentially an outsized risk, but you have to vet all of these. Please give a like if you're visiting in YouTube. I'm going to show you briefly what the TraderLab community looks like. I want to show you that Matryoshka doll. Yeah, time is not part of this, but this is a good concept. This is the idea of a Matryoshka doll. Now, time is not an element in any of this, but it's a good way to express it. But everybody has to do their own thing. I'm not saying you can't use a clock, but when you get to the intraday developing time frame, if you will, there is no time. So none of this, in my opinion, this is just the way I do it. I'm not saying, anybody else. Now, daily, yes, not weekly. It swings. Intermediate time frame is not time-based. It's auction-based. So I would change some of these, but it's a great job, Orca. Appreciate it. Thanks for posting that. You might want to tweak it, or maybe not, but it's cool. Please give a like if you're visiting in YouTube. By the way, this is what the TraderLab community looks like. There's a library of webinars. Thanks, Ned, for doing this. If it wasn't for all the contributions of the individual participants, the TraderLab wouldn't be what it is. It's the community, and it's for serious traders. It's about the business of trading. If that's what you're interested in, use the link in the bottom of YouTube. There is no cost for TraderLab. And it's available to all of you and all the additional education in the Bookmap Discord TraderLab community. Don't forget the like and use that link down there. Verify your Discord email. Come to the Bookmap server and visit the TraderLab community. I'd like to meet you there. Have a great day, everybody. Don't forget FOMC minutes coming out at 1 p. Central Standard Time. And I look forward to seeing you guys tomorrow. Trade well and trade with a plan that has an edge.